You are looking live at the Nasdaq after the close on Tuesday afternoon. We've got some earnings reports to talk about a little later on, but I just wanted to zoom in on the action here. You could see the Nasdaq after the breakout in May. It had that big run up until July, and now it's had these three separate legs down. This is the third leg, and I just wanted to point out something here. First of all, I'm going to go to the weekly and just hopefully, if Market Smith cooperates, and just point out that the 13,000 level has been a level of it's been trading around for 3 years. So don't get too excited if it goes up too much, or don't get too down if it goes down too much. This is not a market to be heavily invested in currently, as I wanted to point out that these three inverted hammer candles that we saw earlier led to a reversal, and this is a pink rally day. And then we had the follow through day and a little bit of a rally, right? And then it faded out, and then we saw another leg down, the second leg down, and we saw again these inverted hammer candles, which usually is near the end. When you see something like that, it's near the end of the selling. And it's, so you're looking for a reversal. We saw it again here. We had the three, then we had an up day, then one more down day, then we had the day one of an attempted rally, then finally a follow through day in just a couple of days, and this one petered out as well. And so now we have these three inverted hammer candles again, and we're looking for the turnaround, which we got on Monday, and today was day two of an attempted rally. So that's where we're at. You certainly could see, another little rally here that fades, but we're looking for a follow through day that could be starting on the fourth day. We wait to the fourth day because the first 3 days could be short covering rallies, and that's what looked like we saw today. Anyway, I'm going to move on from the Nasdaq. I just wanted to point out those candles. When you see those three, that's usually towards the end of it's very bearish, right? Because they're going lower every day, right? You see this, and it's lower and lower and lower. And we felt that last week, but now this week, it signals the end of end of the selling. The selling is abating, and now we're going to get some buying here, which looks like short covering, which is on the average daily volume. But anyway, I'm going to go through the Magnificent Seven, because this is really what is driving the index. This is Apple, which traded down to its 200 SMA on Monday. Got a little bit of a bounce in today. Apple's going to have to wait till November 2nd when they report earnings, because there's a lot of questions about Apple and their exposure in China. They, and how their new iPhone is selling, iPhone 15. Reports are it's not selling that well. So anyway, Microsoft, I'm going to get to this one later on because they reported after hours. Nice response. It's above its moving averages here. I showed you this morning. I run screens, and very few stocks above their moving averages, where their moving averages are stacked 10, 21, 50, and 200 with decent price, with decent volume. I think there was like 58 stocks or something, maybe even less than that. But anyway, I'm going to move on. Google reported tonight. I'm going to talk about that one later. Just wanted to show the Magnificent Seven. This to me looks like an opportunity with that earnings report, just some profit taking from the yahoos after hours. That was a pretty nice report from Alphabet. They beat on both top and bottom lines, and they don't provide guidance, but I'm going to get back to that later. Meta reports tomorrow. It's down in after hours a little bit on that Google report. And they're going to report tomorrow, so you just got to wait for the data point there. Meta has been strong, just consolidating in a base. This looks really good to me. This consolidation period, and then this little handle, the shakeout here, back to a moving average in lighter volume. Meta looks great. Amazon, I believe they're going to be up tomorrow with the reports from that we got this afternoon. Those are really strong reports we got. It's just stocks are going to react differently to earnings reports. But Amazon reports Thursday. That one's below all of its moving averages. Tesla, it looks like it's going to have a battle here with its 200. It sold off after its weak earnings last week, and it's just trading down to that 200, which is a 215.70 today. It's a slightly rising 200, but you know, the short-term moving averages are lower, and Tesla looks like a mess. And the last one is NVDA. Yeah, had a nice day today. Yeah, up 1.6%. Lighter volume. They don't report until the middle of next month, so you got another 4 weeks to hear from NVIDIA. All right, I'm going to go through some stocks today. I'm not going to go through the earnings. I'm going to start with the drug stocks, because to me, Eli Lilly looks like one of those better stocks that I pointed out on that screen that I did, that I showed this morning to the folks at MC Stock Charts. One of those stocks, you know, is trading above its moving averages. You know, the 10 to 21, the 50 are stacked here. It's trading above him. It's trading obviously above the 200. It's got you know, decent volume, nice growth. I didn't even put in the growth numbers. It was just a volume and price and moving averages. But anyway, Lilly looks great. So does Novo Nordisk. I got to point out that it's a ADR. It's a company from Denmark. So the firms there can only buy up to 10% in their accounts, you know, and I've sat on steering committees at public schools and private schools, and they're limited to what they can buy. The one Catholic pension fund that I was on had 20 different categories that you could buy from. There was like defense and consumer discretionary and telecom and internet and you know, construction. There's 20 categories, and you couldn't have more than 5% in any one category. So when technology, you know, like Apple and Microsoft were growing so fast, they had to keep selling it because it became too big for their portfolio. It couldn't be more than 5% in that particular portfolio. And so they had to sell it. Not that they wanted to, but they had to stay in compliance, because they can get fired for not being in compliance. So anyway, just wanted to point that out, that this might be selling from funds that don't want to sell but have to sell just to be in compliance. And they're going to report earnings on the 2nd, as is Eli Lilly. But that stock looks really good to me, trading tight there. And yeah, that one looks like a nice big base. And that's what, about 3 months of basing with this nice handle, pullback, lighter volume. I like Novo Nordisk right here. Vertex is another one that's performing well. I believe it's been in our ready list here. Nice consolidation. You can see that, you know, it's the fake out, you know, then the shake out. And, you know, that's what this stock does. And it's very difficult for me. It's been very difficult stock to hold. But you can see over time, you know, since, you know, the lows in September of 2021, this thing has been a monster. And just a good stock for a long term overall. Anyway, that's it for the drug stocks. I do want to talk about the oil and gas stocks, because they are showing strength. And when you see companies like ExxonMobil, you know, buying Pioneer, and Chevron buying Hess, they're buying those, you know, one was a $58 billion deal. They're buying those companies because they think they can make them money, and they think they're cheap. And so there's FANG with consolidation. I don't know if it's a buyout target or not. Buying a stock because it's a buyout target is not a good reason to buy a stock. But this one has been consolidating for a long time, and FANG looks pretty good to me if you like oil and gas stocks. Range Resources, another one. I got to show the weekly on these because they've been consolidating for a long, long time. This thing has proven the ability to move. You know, moves higher, goes sideways, moves higher, you know, consolidates a little bit, moves higher, consolidates. And now, you know, after this move higher, it's been consolidating for a long, long time. I would not be surprised to see this thing move higher out of that $32, $34 range. PR is another one. I know that's on our ready list. Another one that consolidated for a bit. Now it's moved out of that base and has formed another base. It's only a 6-week base, cup-shaped base. Got to go to the daily for this one. See this cup here after the move higher. The cup, now it's pulled back to its 10 inside day today. This stock is doing absolutely nothing wrong. LBRT, this was one that was on the screen for just strength, you know, above the moving averages, decent volume, you know, decent price. RS line, good. It's got the blue dot showing that it's relative to the S&P. It's a strong stock. Anyway, I wanted to go to retail because there's been, this narrative that we're going to have this big recession. I've been hearing it for a couple of years, and it's just not happening. And Lululemon, made a new high last week, I believe, and then pulled back to its 10. It got a little bit ahead of itself, but it found support there. And this thing's shaping up into a base with the buy point there at 406.94. I would get in a little before, because there's not much overhead supply there at all. Just a couple of days above the 406. So that to me looks good. Lulu might show up on our ready list here soon. AEO is another one of those strong stocks. I'm not saying, run out and, plunk a bunch of money down on this one, but this one has shown strength. You can see the consolidation here. And then this cup is actually acting as a handle here. This big base here, pull back, and then down back to the 21 where it found support. And you can see the RS line is showing strength. So that stock looks good to me as well. Abercrombie and Fitch had this gap, serial gapper back here in May, another gap here on earnings. And now it's just continued to just trend higher with its moving averages. And the only chance it's giving you is when it pulls back. This is a buy the dip stock, there are not many here these days. But you can see every time it pulls back, it finds support. So Abercrombie and Fitch looks well. And a couple stocks that I wanted to get to. One is ELF, because to me, this is just forming a base. It looks really good to me. Not like right now, it needs some more time, but I want to see this thing build out the right side of the base around that 120 area here. And we'll see if it can do that in the next couple of weeks. But that stock looks good to me as well. It's up to 110 today. It just needs time. These ones need time. Same with Celsius, just needs some time. Made that high, got a little bit ahead of itself there at 206, pulled back. It's below the 50. I realize that, but I'm looking for this thing to trade through the 50 and do something like, this and be a buy here in the next couple of weeks. Yeah, we got some thunder here today. Sounds good. Software stocks, I got to go to CrowdStrike. I don't know if that Microsoft report is going to have some pin action for these the software names. This is CrowdStrike, but it is up after hours. This one pulled back to its 21 EMA on Friday, and then cut below it on Monday, which shook me out because I didn't want it to trade below the prior low there. But it's fine. It's above its 21 EMA. The next one I want to point out is Zscaler. Zscaler is it looks strong too. Right there at the 162 level. This one, it's just formed this little consolidation period, this little box here, and when it breaks out of the box, I'm interested. That one could show up on our ready list as well. Palo Alto Networks, I know this one we've been hawking this one for a while, and it's just, forming this base. It's just not ready yet. It ran up, looked like it was going to break out, then pull back to the 50. So what I'm looking for is to see this thing ramp higher above the old 258 and show some strength with some power, some volume, which it has not had. Another software stock that I like is ESTC. And this one, gapped higher, and it's holding its it's forming like a shelf type pattern. It's holding its gains, supported by the 21 EMA. So that software name looks good to me as well. When you see moves like yesterday and today, and I talked about on the follow through day, that we have to wait 3-4 days because you see short covering and names that have been beaten down. This is CROX. I mean, this thing is, what was it, 151 and sold back to what, 80? So if you're short this stock, you got to take profits, right? It's the opposite of a stock running up and then pulling back to moving averages like it did here. Ran up, pulled back to moving averages. There's profit takers, right? Well, on the short side, there's profit takers. Anybody who shorted this name up here or up here, and didn't, you got to take profits when you got a 20% gain on the short side. So that's what I think we're seeing here today. I don't know that for sure, but when you see stocks like TGTX, this is a heavily shorted name, up nearly 11% today. You know, the volume, this is indicative of short covering. Same with Viking, that looks like short covering to me. Digital Ocean, just beating down names. You know, it's time to take some profits in them. Asana is another software name. You know, it was up nearly 6% today. This just looks like short covering. You know, they re-shorted at lower prices, right? They buy it back. You have to buy the stock back at lower prices. Then you short it again when it runs them into the moving averages, like CROX to me. You know, it got short covered. It ran up from what, 80 to 90 or something here in the last couple of days, 82. And now today it ran up to 89.92. And it is running right into resistance here at its 50. Maybe it'll trade right through it. You know, maybe it'll rally through. You know, let's hope it does. But this looks like short covering to me today. Anyway, I just wanted to point that out. And anyway, that's it for me today. Thank you for watching, except for I have one more thing. In honor of the great Steve Jobs, I do want to take a look at a couple of stocks that reported today and just see how they're doing. Microsoft, their cloud business was very strong. This could provide some pen action for software names tomorrow. You can see this double bottom base here. It made a bottom, then came down here, made another bottom below the 50, then rallied through. So maybe it can get back above this 340.86 level tomorrow, which it is already an after hours. So we'll see if that holds. You can never trust any after hours you just can't trust the numbers in after hours because you got to wait for the institutions to come in tomorrow and see what happens. Google, they do not provide guidance. They had a good earnings report, but you know, it was up. It's been up quite a bit. It looks like this one's going to pull back below its 50 tomorrow. Yeah, 134.45. So that one looks like it's going to open below the 50, but man, good earnings report. This stock has been a strong stock. Snap, I don't even want to get into Snap. This company is worthless. It's the end of the 200. It's under $10. I don't care. Visa had a good earnings report though. Another one where the consumer, you know, has got to be. This should help the retailers because they had a really strong report, and people, I guess, are using their credit cards. Visa gets paid one way or the other, but that was another strong report. So you know, I'd expect these reports to kind of help the market tomorrow. One more was Texas Instruments. They reported a beat quarter. Man, look at that. This thing has been beaten up and it's down 4% more after hours. I don't know what they said on their conference call. I do know that they beat expectations. But anyway, I'll have more in the morning on these. You got to listen to the calls and see if they get some color from these analyst questions and from the CEOs. Anyway, that's it for me today. Thank you for watching. At MC Stock Charts, we never give up.